Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, March 10, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, Mrs. Market is getting taken out behind the woodshed, shot 3 times, one more time. So let's discuss what we have. There's a lot of stuff on the docket. I want to go over a lot of charts. We're going to go over long-term charts, short-term charts. We're going to go over swing trade stuff. We're going to go over all kinds of stuff because there's money to be made in this market. Write that down. Put it on a sticky note. Let's refresh our memories. Originally, dating back 5 months ago or so into 2024, the fourth quarter of 2024, we were looking for a February-March low, even as the market was rising. People were scratching their heads and saying, what are you talking about? David doesn't know what he's talking about. That's absolutely bonkers. Well, here we are. Now we can put February aside and say, we're looking for a March low. Let's narrow it down just one more notch further. We're looking for a low. Why is that? Because this is the week that we zeroed in on. We have a full-on lunar eclipse this week. We have the whole budget discussion culmination on the same day, the end of this week. Whether it lines up and becomes late this week in terms of a low or not, we'll see. That remains to be seen. Nothing is ever really perfect in the market, but we want to have an idea of what we're looking at, and we're looking for a low. We're pretty close. The market's been down about 2 weeks in a row, 14 days in a row. Not down every day. And when I say 2 weeks, it's really 14 days. It's like 3 weeks in market time. Not every day, but you can see here the trend is obviously down. We're below all the moving averages on the daily chart. That's a firm downtrend. And when you flip over to the weekly chart, today, and this is a weekly number, so there's a long runway for the rest of this week, but she cracked the 50-week moving average. This is an important place, and I'm going to show you why. This is something that I teach in my class, MFS Masterclass Series. You see this black line? The market ran up to this place and was summarily rejected. Once they got back to that place and busted through, that created a former breakout area. This is where the market broke out, and she came down last week and into this week to that exact place. Doesn't have to bounce off of it on a dime. The point is, the rubber meets the road based on this week, whether that place holds or not. It doesn't have to hold on this day, the day she hits it. It's a weekly chart. We have a weekly 50-period moving average. We have an important breakout area. We'll see where the market takes us over the next couple of days, but this is one area of grave importance. I would write that down, put it also on a sticky note. What happens if we get a further flush this week, like another couple of really bad days? What's the number below where she would be heading? What would be a bona fide target? We're going to call that 533, give or take. Doesn't mean she's absolutely going to hit that number, but 533 is, in fact, a bona fide target, important number, magnetic, all that stuff. I would write that down, put it on a sticky note. It's a just-in-caser today. If she starts to get close to 533, she's likely to hit 533. We talked about last week, and this was the thumbnail of the last video that was put out on Thursday, stocks on a collision course. A collision course for the full-on lunar eclipse on the 14th, the end of this week on Friday. How you doing? How about the lazy swing trader Automagical algo system? While the market was getting taken out behind the woodshed, shot 3 times today, we had a position long, believe it or not, in D.R. Horton, home builder. 130.86 was the entry. Exit was today at 136.15. How you doing? How do you like them apples? In contrary to what the market was doing, it's called a divergence. But wait, there's more. How about another one? TXT, Textron. Again, another long position, 74.13 entry price. Exit today where? 76.50. How you doing? One more time. These are long trades in the face of a tape that's getting absolutely bludgeoned, taken out behind the woodshed. How do you like them apples? But wait, there's even more. How about Honeywell? In at 209.19, out at 217.85 today. One more time, 3 profits hit today in the lazy swing trader Automagical algo system. How you doing? Apples, we love Granny Smith apples. Before we move on to other stuff, let's just take a moment to cover the media bonanza that's going on. They don't know what to say. Is it tariffs? Is it recession coming? All of a sudden, there's uncertainty out there. Let me ask you this question. When you hear the pundits talk about the reason why the market's going down, or reasons as it is today, one of them being uncertainty, when's the last time you had absolute certainty in the market? Can you identify that period of time? And then check this out. When the market's going down, why is it that they always bring out the market technicians, meaning the technical analysis people when the market's going down? They never bring them out when the market's going up. When the market's going up, stocks are cheap and you have to buy. They're out of ideas. So when the market's going down, they bring in uncertainty. It's a recession. It's tariffs. They're all over the place. They don't know what to say. So they bring on the technicians to tell you, here's the 200 period moving average. Here's this, here's that. They don't know what they're talking about. What about inside the numbers? Any money to be made today inside the numbers? The short answer is, you bet your bottom dollar. We had plenty of traders make thousands and thousands of dollars today. One more time, it's a morning business. They stick around for 60, 90 minutes and they make their money. They put it in their pocket. They keep it in their pocket and they go about their business for the rest of the day. Whether it's fishing, whether it's golf, whether it's sleeping, whether it's going to work, whatever it is, it doesn't matter. It's a morning business. We had a pivot today, 568.10. Let's identify that first order of business. Below the pivot, she's bearish. Above the pivot, she's bullish for a rescue operation to fill the gap. She stayed below the pivot for the most part and then leaked lower. So let's see what the next number down in the sequence was. How about 563.75? And you can see what happened there. The short answer is, yeah, we're traders long at 563.75. And that wasn't necessarily the first trade of the day. It doesn't matter. You get a chance to read the notes, go back to the chart and double check the work. But this was on the board at 0 dark 30, meaning, hey, we had a beat on the numbers and you could see it here in green, red, and white that the number worked. 563.75 bounced the tape and we had plenty and plenty of traders that pocketed plenty of money at 563.75. What I urge you to do is pause the video, read the notes, go back to the chart, and double check the work. 563.75, 563.75. Pause the video, read the notes, go back to the chart, and double check the work. 563.75. Next number down in the sequence. How many times do you have to say the number or write the number for the traders to get the point? The more you write it, the more they get the point, the more they make the trades. Pause the video, read the notes, go back to the chart, and double check the work. Now watch this one. Let's pick out the next one down right here. The next one down is 561.35. The next one down is 561.35. Not a tremendous bounce, but a profitable bounce nonetheless. All we're looking to is get our pound of flesh out of the market each and every day. Some days we're short, some days we're long. When the market finishes, or starts, I should say, down a lot on the day, she's starting in the hole. The better opportunity most of the time is to be looking for a bounce off support. Shorting in the hole is a very difficult endeavor. We have this discussion in the live room each and every time we're in this circumstance. Nevertheless, 563.75 worked, as did 561.35. How you doing? How about a new lazy swing trader Automagical algo system trade initiated today? 57.90 for an ETF, KIE, an insurance ETF. Now, how does the system know that that's the number? She hits it, she bounces right off it, putting us in what we call a leading position in the trade, if you will. It's like the pole position. It's not a tremendous move off 57.90. The point is, is she came into it, bounced right off of it, tells you that somewhere along the line, the market knows about that number, the lazy swing trader Automagical algo system knows about that number, and guess what? David knows about that number. How you doing? Because it's David's algo, Automagical algo. After the detour, pause the video, read the notes, go back to the chart, and double check the work. We had some stocks on the move, and then we have our list of markets. Go ahead and snap these, put some numbers on your chart, see what happened at the numbers. The numbers work. Write that down. Put it on a permanent sticky note. What about Camp IWM, my favorite market leading indicator? What have we been discussing in this market? Haven't we been discussing the full stack situation around 200? You have a weekly chart breakup candle low. You have a 200 period moving average, also along with a convergence of a 100 period moving average. We talked about this number all week long. And here we are Monday morning at a full stack number around 200. Write that down. Put it on a sticky. Daily chart looks like a waterfall decline. Weekly chart looks like she came into an important place, at least as far as I can tell. Monthly chart, 50-month moving average. Monthly chart takes a long time to play out. There's a lot of runway left in this month, but thought I would point it out nonetheless. What about the transports? Second favorite market leading indicator, a number one canary in the coal mine. Below all the moving averages, and this applies to any market that's below all the moving averages, the trend is in fact your friend. Last moving average in the line of defense on the weekly chart is the 200 period moving average. We've been looking at this for days and days and days. We've got coming into what's called market symmetry. If you're not familiar with what market symmetry is, go back to the MSF Masterclass series. We discuss in one of the modules how you determine market symmetry, what it is, and how to use it to your advantage. Same routine with the Q people. Another outside the woodshed day, shot 3 times. Clear up some of the noise, go to the weekly chart, and you can see below the 50-week moving average. It's going to be interesting to see where they finish the week. The next big time breakup candle low in the sequence from where they are now is right about down here. We'll call it 454, 450, 452, 451. That was a moving target. Let's get rid of the line and actually give you the number. And the number of this breakup candle low happens to be 449.82. We'll call it 450. Big fat round number. Weekly chart breakup candle low. That's an interesting spot. Write that down. Put it on a sticky. Financials struggling. And remember what I always say. If the financials are cracking, the underlying theme of the market is there are cracks in the market. If there's nothing wrong with the financials, there's likely nothing wrong with the structure of the market. Well, here, she's given up 3 out of the 4 moving averages that we follow. You flip over to the weekly chart and you say, all right, we had a reversal week last week, got below the 20-week moving average, coming into what? This is going to be critical this week. Big time breakup candle low, and just below that is a 50-week moving average with another big time breakup candle low on the weekly chart. So you have this area right down here that should is the operative word, should catch the tape. The financials, XLF. Write that down, put it on a sticky note. And then you've got Smash Mouth below all the moving averages. She's a problem. Below all the moving averages on the daily. The trend is your friend. Coming into a weekly 100 period moving average. Big time breakup candle low. We identified this spot last week. 200, that's another full stack type of situation. I would write that down, put it on a sticky note, because right in this box right here, you've got some kind of full stack situation coming up. Never looks like it in real time, never looks like it when it's happening, but you have a full stack situation. Remember, this is a weekly candle. This is a weekly moving average. That means if she's down there, she can certainly crack it intra week. It's where she finishes the week that will be uber, and I love that word, uber important. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, my strategic forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.